All right. Good afternoon, everyone, or good morning, depending on where you're tuning in from. Welcome to the Loan Officer Training Series with the Mortgage Calculator. Give us just a moment here to get started. And let us go live on all the different platforms here. Definitely appreciate everybody tuning in nice and early. I see some comments coming in there in the chat. Go ahead and keep dropping comments there in the chat. Definitely appreciate it. Great topic here for today. And it looks like we are ready to get into it. We're live on all the different platforms, so we'll go ahead and get it started. What we'll do is we'll take the chat off the screen for now. We'll go ahead and keep dropping comments there in the chat, and you can also drop any questions you have in the chat. We'd be happy to answer them after we go through the presentation. So, welcome everyone. My name is Kyle Hershey. I'm the COO of the Mortgage Calculator, joined here by our president, Nick Hershey, and our CSO, Jose Gonzalez. We are a lender that specializes in non-QM loans. And what we do every Tuesday, Wednesday, and Thursday at 12 p.m. Eastern on the show is go through a different loan officer training topic. Today's topic is a great topic that we love here at the Mortgage Calculator, which is navigating 1099 loans. Definitely an amazing program. So, Jose, I will go ahead and let you get right into it. Let's talk about 1099 loans and how to originate.
All right. Yes. Great topic. Nice outside the box solution. This is one that you definitely want to have in your arsenal to be able to help borrowers meet the lowest cost option for their loan needs. Because 1099, the 1099 option is often overlooked. And people tend to choose the bank statement option, which is a great option, the most popular non-QM option, I do believe right now, bank statement loans. But I really think that 1099s are being underserved because of lack of awareness. And that's why we're here today, letting all of our loan officers know how to navigate those 1099 mortgage loans when dealing with your self-employed borrowers. So let's get right into it. So now, what exactly is a 1099? I think that's the first thing that we have to address here, because many times MLOs and borrowers alike may look at the 1099 in a similar way as they look at a W-2, right? It's a form coming from my employer, because in some cases, that's how the borrower views the relationship that they have with the contract, with the company that's contracting their services. Because when they're a 1099, they are an independent contractor, or should I say, when they're a 1099 contractor, that they receive a 1099, that's exactly what they are. They're an independent contractor. They are responsible for their own taxes, right? There are no payroll taxes deducted from the borrower. So the 1099 document displays their full gross income, right? Gross income, no deductions. Borrowers responsible for their deductions. And that's where the 1099 loan has come into play, because as most self-employed borrowers, there's going to be business expenses, there's going to be deductions, and there's going to be a net income. So if you were treating your borrower that receives 1099s from the company that contracts your services, and you're going the traditional full doc route, then you would need tax returns, either 1 year or 2 years, depending on the loan program, depending if you're going FHA, that always requires 2 years for full doc for all loans, or depending if you're going conventional and you happen to get a 1 year finding, either through DU or through LP, because a borrower has been in business for at least 5 years. That's an LP option automatic. So full doc, traditional, you're going to need the tax returns, and you're going to do your income calculations. All those business expenses are come into play, because you're going to be looking at the net income, either that they reported on their Schedule C, right? Usually that's where 1099 income is going to go, unless they may have some type of an LLC set up, and maybe they have the LLC income running through an S corp, as I've seen sometimes, or if they have a partnership, there's going to be a 1065 partnership report to look at for income calculations. All of that is going to be for your borrower, traditional income full doc that receives 1099s. Just because a borrower receives 1099 documents from the company that contracts them for their services, I can't really say their employer, right? Um, that does not mean that you automatically have to go non QM, alt doc, 1099 loan option, which is what we're going to discuss today, right? Because the lowest cost option, if full doc with tax returns does work out for them, is going to be for a primary borrower at least, it's going to be the agency loan, right? 3%, 5% down, full doc. However, for those scenarios where you do your income calculations and the numbers just don't add up, DTI is way higher than it should be, that's when then we go to our alt duck options. And today's happens to be when our borrower is self-employed and receives a 1099 document and they have a lot of write-offs. We have the great example, the great option, which is this loan that uses 90% of the income that is stated on the 1099 form. So as it says there, that form is issued to sole proprietors, independent contractors, partnerships, and LLC for non-employee compensation only. And as also stated here, it is only for self-employed borrowers, allowing 90% of the borrower's gross 1099 income to be used for qualifying. That's why I was saying this is a underserved program compared to bank statements, because on your best day, best case scenario, the bank statement option is going to allow for 80% of the deposits to be used for income, with a default profit margin of 50%, meaning they add a 50% expense factor by default that can get reduced depending on the option you choose. Sometimes there's a table that categorizes business types, employees type of business, then they give you an expense factor, or other times it can be adjusted via a letter from the tax preparer slash accountant slash CPA to state what the expense factor is for the business and give an adjusted income that way. However, the 1099 is always 90%. So now I think that as we create more awareness and there's more borrowers that may be getting 1099s that are applicable for this, like one of the real popular categories for this would be real estate agents, right? All real estate agents receive a 1099 from their broker, and they have to have only one broker. And most of the 1099 options do require the 1099 to be from one source only. Most of them, not all of them, but most of them. Now, it's really important to note they'll state in the guidelines you need 2 years self employment, 2 years of history self employment, uh, of the business existing 2 years. However, as you know, at the mortgage calculator, we do have a lot of outside the box solutions. So we even have outside the box solutions for the outside the box solutions like the 1099, because we have an option that allows origination and funding of the loan for a borrower with less than 2 years employment with these conditions present. It could be a borrower that previously worked for that company in question as a W 2 employee and is now working for them as an independent contractor. Um, I just recently had this one that occurred with a doctor. He was previously working for a hospital as a W 2 employee, and now he's an independent contractor just for the same hospital, getting paid to his LLC. So that one ended up working there. And he only had 12 months of proof of that, and we got it. Another example could be that the borrower previously worked that job type, so not necessarily for the same uh, contract, for the same company as contracting them, but just the job type as a W 2 employee, and is now working as an independent contractor for the same company, but it could also be for another company. It doesn't have to be the same company, just doing the same job type. That'll work. And one that's a little less well known, but very common, is the borrower previously worked that job type as a licensed W 2 employee, the licensed part is the critical component here, such as an electrician, for example, and is now self-employed as an electrician, only has 1 year proof of being self-employed, maybe has their LLC to prove when they formed it, or a letter from the accountant or tax preparer that states how long they've been self-employed. The third-party verification letter from the quote-unquote CPA will always verify self-employment. For example, when they're a sole proprietor, because the electrician we see there, it could be a sole proprietor, doesn't have an LLC, doesn't have a corporation, but his accountant states in a letter, yes, he stopped working for XYZ company on February 2023, and in March 1st, 2023, started his new endeavor as a self-employed electrician. And now and that was March, and now we're in October, so we'd have 1 year and 6 months. So we definitely would have our 12 months that we need for approving them with less than 2 years self-employment. So that's a really, really, really big one to remember and take into consideration when you're structuring your deals. So let's talk a little bit about what type of borrowers, LTVs, and the like, FICO scores that for structuring our 1099 borrower loans. As previously mentioned, self-employed borrowers only. Now, that does not mean that your borrower cannot also have W-2 income. Maybe you have 1099 income where they're doing it with a 1099, and maybe they have W-2 income doing something else, or maybe even doing the same thing. That happens, for example, with nurses. A nurse could still be working W-2 for a hospital, right? And they're doing their 30, 35, maybe even 40 hours a week, getting 40, 50, $60 an hour plus overtime and all that good stuff. And then that nurse could also be contracting out their services to an agency, and the agency pays them with a 1099 because, they have a LLC, possibly even for that, not required, but they're getting a 1099 from that agency. Then you got 1099 income there as well. But now remember, if those are two separate jobs, there's going to be other considerations to be able to use both streams of income. Usually you have to be doing both streams of income for at least 2 years to be able to get the income from two separate jobs, regardless if one is self-employed and the other one is W-2. But that's just another example. But definitely self-employed borrowers, perfect for realtors. 90% max LTV, as is usual and customary for all non-QM loans, because this is a non-QM loan option. Now, we do have an option for rural properties up to 20 acres and 80% LTV. For those of you in some of those areas, getting some of those types of loans, that's a really good one to note. Minimum credit score is a 600 at an unbelievably high 80% LTV for a 1099 option. That is applicable for both primary and investment properties. 80% LTV max with a 600 credit score. Primary, second home investments, and non-warrantable condos up to 80%. That's another welcome point there. Your non-warrantable condos are your condos that may have issues with the association, litigation, but all the different components that affect condos when you can't do a full review. So 80% LTV with a 1099. Entity vesting allowed for your investors, really important. LLC, S Corp, C Corp, partnership are some of the more common entities. Not the only ones allowed, but those are the four most common ones. And as far as citizenship, this is status. This is a very important one to note, right? Pay attention here. Okay, U.S. citizens, green light. Permanent resident aliens. It's a U.S. Permanent resident has the quote unquote green card. Non-permanent resident aliens. This is a very important point to note, because the non-permanent resident alien, which is a borrower living here in the United States, and in this case, for this particular status, deriving their income in the United States with a work authorization document allowing them to work in the United States and with U.S. credit, and obviously claiming their income, in this case, through a 1099, that non-permanent resident alien category borrower is eligible for most of the same loan products that a permanent resident alien, a U.S. citizen is. They would be in that same category and get the same rates and the same pricing. They're not going to be an I-10. Now, the I-10 borrower, you have to put non-permanent resident alien in the pricing engines to pull up the I-10 borrowers, but they are not a non-permanent resident alien because they do not have a work in that category, because they do not have the work authorization document. They do not have any type of legal status here in the U.S., whereas a non-permanent resident alien does have legal status here in the U.S. through either some type of visa that allows them to be here to work, or some other type of immigration status, or maybe an H-1B1 visa, different types of immigration statuses that would allow them to be here legally, versus the I-10 borrower that is does not have legal status, but is working here in the United States, deriving their income from the U.S., does have U.S. Based credit, and does have an I-10 document. They got to have the I-10, which is the individual taxpayer identification number, which is what allows them to receive the 1099 and file their income tax returns, which if applicable. So, but the I-10 borrower then would be a separate I-10 category. So when you are structuring your loan for the I-10 borrower for a 1099, make sure that you've selected the I-10 option for that 1099 loan, because it's going to have different pricing, different parameters, different guidelines. And last but not least, in this section here, foreign nationals are not eligible because the 1099 loan product is based on the borrower receiving a 1099 document for income generated in the USA. So that's really important to note. Therefore, national borrowers are not eligible. And last here, we're going to cover the income requirements. So now you've vetted the deal up to here. You've realized that full doc in the traditional sense doesn't work for your borrower that receives 1099s. You've vetted their credit, the property type, LTV, assets, but now we're breaking down the income. So do remember, always 90% of the income is applicable, of the gross income stated on the 1099 form. Only a 10% expense factor, which blows bank statements away. A business narrative is going to be required, and that's going to depend on the loan option selected. Each investor is going to have their own business narrative form, but it is going to be required because they want to see the structure of the business to make sure that it actually is self-employment. Now, please note that all of these guidelines for the different loan options are specific to that option. So you cannot generalize any of these components. These are here. These are different requirements you're going to run into. But like for this third bullet point, where I state may require the borrower to receive the 1099 from only one company, that's because in the majority of the guidelines, that's what it states. A borrower has to receive the 1099 from one company. Some of them may state that they have to be with that company for 2 years. So you got to really review the guidelines. You cannot generalize any of these points when you're structuring your deal. So what is going to be a pretty much across the board requirement, minimum requirement, is that you have to have the 1099 for the most recent complete year. 12 months is usually required. The only exception to this would be, for example, the doctor loan that I just mentioned, where the doctor transitioned from W-2 employee to 1099 employee in June of 2023, right? So the doctor did receive a 1099 in 2023, but it was only for 6 months of work as self-employed. So he had a 6-month 1099, a 6-month W-2, and then we had the year-to-date earnings of 2024, and that's how we completed the 12 months. A verification of employment type form sent to the company that was contracting him. We got year-to-date, we had pay stubs, we also looked at bank deposits, and that completed the puzzle for the 12 months of income, even though we didn't have a 1099 for 12 months. So do know that there are workarounds for these scenarios. Now, the income is validated with a wage and income transcript from the IRS, a W-2 and 1099 transcript only. Please do not provide the record of account transcript. Please do not provide the tax return transcript, because that's what we're trying to avoid here in going this alt doc route, is not presenting tax returns that have all of the business expense or personal expense write-offs for the borrower, that then at that point, if you provide that document, now they're going to use that document to calculate the income, and now your borrower is not going to qualify. That's the same as providing tax returns with a 1099 only loan. So make sure that the tax transcript that is provided is the wage and income transcript only for whatever year that you're being required. Maybe it's 1 or maybe it's 2. Please note that this option may require confirmation from the employer that no job-related expenses are incurred by the borrower. Simple letter from the employer should underwriting ask for it. And most importantly, last but not least, please note that independent third-party verification is required of the current income. Now, I just noted how my doctor's loan there, we used multiple documentation, since we didn't, we were trying to prove multiple things with that action, the year to date, as well as complete our 12 months, which is why we had to provide, the pay stubs that he'd received, or pay, I guess, statements, because really not pay stubs. They didn't have any deductions, just a statement of what he got, the bank statements, and a verification of employment from the employer. But you may be asked to prove that, you have to prove the year-to-date income for the borrower. It's not going to usually be with a profit and loss. It's usually what they're going to require is either pay stubs that show the year-to-date income, because, they're not getting paid cash. They're getting paid with some type of check, or a written verification of employment from the company contracting them for the services, or a letter from their CPA, or in some cases, they'll even accept year-to-date bank deposits. So you really got to look at the guidelines. And I am going to share a couple of guidelines with you in the end of this presentation, just so you can compare the differences and put into context what we're discussing here. But do pay attention to how the income is calculated. Pretty easy, 90%. You just got to make sure that all the other boxes are checked as well to document and verify the income. So here we have 2 sample guidelines. This one up here is one guideline, and this is another guideline. And that's the full section for 1099 loans for each one. It's very easy, right? They're talking about 1 year 1099 provided from single employer for 1 year, validated with the wage and income transcript. Year-to-date earnings are required, the 10% expense factor, and they're only telling you need tax returns if you can't really provide any of these documents here. They're going to ask you for tax returns. And they talk a little bit here about seasonality. And notice how they have the box in red that talks about you don't need a full 1 year period 1099 when the borrower changes from being paid W-2s to 1099s while working for the same employer in the same position. So that's how we got our doctor approved. So that's one option. Now look at the option below. It's even a little simpler, right? We're talking about qualifying income is determined by reviewing the 1099s and the year-to-date bank statement deposits. This 1099 income and year-to-date bank statement deposits will be multiplied by 90% profit margin to determine the net income. And notice how here they're talking about if the net income from the year-to-date bank statements is less, then, but the income is stabilized. In other words, it's not declining, then they're going to use the lower option. Now, but they're also telling you if the net income from the year-to-date bank statements is greater, then they're going to use the bank statements, right? An average of the bank statement income and the 1099 income. So they do give you an opportunity to bump up the income if the business's activity is increasing. So these are 2 separate ones, but this second one here, which happened to be the one under which we closed the doctor loan, this guideline is a little simpler than the one on top, and simpler than most. But notice the point here: only one 1099 may be utilized and issued to the borrower for a service provided for the same company for 2 full years. So do note the small print, like we like to say there. And in our last slide here, just sharing you the 1099 of our favorite borrower, the infamous Mr. John Homeowner, who works for, well, doesn't work for, he is an independent contractor of Wonderful Place, right? And he received his 1099 for non-employee compensation for $124,500.87. So Mr. John Homeowner's income there, if we were to apply the simple income calculation here, right? There's no income calculating document here. It's simply get that gross amount times 0.9, and we can credit Mr. John Homeowner for an annual income of $112,050.78. And if we divide that by 12, we're looking at $9,337.56 monthly income for Mr. John Homeowner. How quick was that for an income analysis for your self-employed borrower, right? So keep in mind these 1099 loans when your borrower actually receives a 1099. And remember what I mentioned at the beginning of the presentation. Do not assume that just because they receive a 1099, that is not a traditional full doc borrower. You first have to complete the income analysis using the tax returns as may be applicable. And then if you see that the numbers don't add up, going traditional full doc, then obviously we transition to the 90% LTV max 1099 alt doc loans. So wishing you all lots of success in structuring your 1099 deals, and looking forward to some of these coming by the live support room for structure, and you letting me know that this presentation is what basically brought it to mind for you to structure your deal with a 1099.
All right, great. Thank you, Jose. I don't see any questions. Absolutely amazing program there. But no questions came in, so we'll go ahead and wrap it up. Remember that we do this training every Tuesday, Wednesday, and Thursday at 12 p.m. Eastern with a new loan officer training topic. So we will see you all tomorrow, 12 p.m. Eastern, for the next episode of the Loan Officer Training Series with the Mortgage Calculator.